Oh, testing. Thank you. Thank you for the large attendance. It really makes me feel warm and fuzzy. I'm here to talk today about Freeman Gold. Okay. Beautiful. I'm just going to skip a lot here because two guys here are here that I know. The other guy's sleeping. So, okay, Freeman Gold. It's you could read it. It's a 1 million ounce open pitable, easy to construct gold oxide deposit in a good jurisdiction, and it has deep discount value. Okay, this is mostly from my chief geologist and all the lies he tells me. Okay, so you know what makes good assets are good team, good jurisdiction, a good deposit. So we're definitely one in Idaho. Idaho is ranked one of the better mining institutions, states in the world. It was ranked number 7 in terms of investment attractiveness in 2021. I think it's 21 today. And in terms of policy perception, it's 15, I think it's 11 with 2024. Okay, as you can see, we have a lot of good friends. Perpetua just believe got their U.S. Forestry Services record of environmental permit, and so that will be going into production. We have some other companies, Liberty Gold, some Brethren and Revival Gold, that are also in the gold industry, and they're doing quite well. Next slide. Okay, so this is the thesis for the deep discount value that Lemhi Gold project has and Freeman. So, believe it or not, we have a top tier management, okay, except for Dean maybe. We've got a huge record of success in delivering projects, mostly through sales. We're right now in the middle of a feasibility study. We'll be completing the first quarter. We're in the permitting stage. We've got well understood geology. We've drilled over 100,000 meters of drilling. We did a PEA in 2023. We updated it with more recent gold pricing, and you can see that after tax at a 5% discount, it has a value of $876 million and an IRR of 57.4%, and this is using a $3,400 US gold ton. Our life of mine cash costs are about $925, and our all-sustaining capital is up at $1,100. So a quite robust project, okay? And the metallurgy, we've done 3 phases of metallurgy. Almost 95% of the contained gold we can get out of using traditional carbon and leach processes. Okay, we did as I said, a 43-101 resource in 2023 from all the drilling, and we have identified almost 1 million ounces of plus 1 gram material in the measured and indicated, and in the inferred almost 250,000. Okay. Very small, concentrated gold deposit. Okay? It has exploration potential to the north and south of it on a very, very huge land position of 2,700 hectares. Okay? We have a permitting advantage, is that the majority of the deposit lies within a patent, and some of the patent can be covered by facilities for mining. And I don't know if many people in Germany know about patents, but it allows us just to get state permits and not go through a long federal process. So we can fast track permitting. And we could actually look at developing and mining Lemhi in a 2-phased approach, using the state patent first, and then waiting for the federal patent to come, and then mining the rest of the deposit. Okay? Where the value-driven proposition here is that right now our value, actually as of September 30th, it was $57 million market cap. okay? And on a per ounce basis, it's $47 billion, okay? 47 million market cap, 47 million on an M&I basis, okay? And I'll tell you that's a really low number, okay? And that's where the value is. So let me talk about our success. Next slide. Okay, so I've been lucky enough and fortunate enough to work with a lot of smart people, and either through the capacity of executive chairman or CEO, and working with Bassam as my CFO, I've transacted on 8 different companies and sold them. So almost $3 billion worth of companies. Some like if you're in Energy Metals, one of the first uranium companies in early 2004, sold that for $1.8 million for Uranium One. Potash One you might be familiar with. I sold that to Kelly and Salts, a German company, for $434 million. I went through a lithium phase and sold 2 lithium companies. Lithium One sold to Galaxy, and Lithium X sold to NextView. Okay? Most recently, I've sold Gold X to Grand Colombian, to Toro Poro, for $350 million. I'll make 2 key points here. A lot of the deposits that I actually sold went into production. So we have an eye for good resources. So Potash One, Kelly plus Salts, the project I call it was Legacy. They spent $5 billion, and now it's called the Bethune Mine. It's been operating for 3 years. Gold Rock was bought by Fortuna Minerals. The property was called Lindero. And Lindero is in production today and is a main asset for Fortuna. Lithium One, Sal de Vida. I was the one that actually coined that phrase. Okay? It was bought by Galaxy, which is ultimately their properties were bought by Rio Tinto, which is putting in production, and POSCO. Big projects. Okay? Lithium X, NextView, was bought by a Chinese group, and they're putting Salar de Los Angeles in production. So that's the first point. The second point is that on average, on a net present value basis, I sold those companies for anywhere between 0.25 and 0.35 of net present value. Okay? So that's kind of the standard if you have a good project to do. I'm also blessed in Freeman with a lot of good people, including some people are talking today. Simon Marcotte, he's the CEO of Northern Superior. He's, I think his market cap is $250 million. Victor Cantori, coincidentally born on my birthday also, runs AMAX. He's, I think, giving a talk today. His market cap is $350. Will Randall helped a lot with Lithium X. He sold Arena to Lithium America. Bassam, my partner, compatriot, CFO. This is his first gig as a CEO of a company. Tons of experience, instrumental in helping me structure and finance all those deals I just described. And it's truly. So, just looking at some more detail of the Lemhi project. Okay, so well positioned, well located. I don't know if this laser works, but to the right, there's a road, there's a highway. The highway along the side wraps right around. It's Highway 93. It is about 6 kilometers, 2 entrances from the south up into the plant, into the open pit, or from the east to the west, 5 kilometers. Easy accessible. Salmon is about 30 miles to the south. Okay, there's grid power. So we have infrastructure, grid power, 4 kilometers, let's say 4 kilometers from a major highway. The mine itself, we have a patent, and most of the mine, this doesn't really work, laser. Most of the mine, So, well located, it's an open pit, it's primarily based on conventional drilling, load, blasting methods. The average throughput will be about 75 to 8,500 tons a day, and it's going to increase over time. The strip ratio is about 1 to 3.9. Here's the beauty of this thing. It has a capex of $190 million to put into production. Okay? Not billions, so one that you could actually build. Okay? We put a contingency of 15%, so that's 26.2. It has a very simple metallurgical flow sheet to take advantage of the higher grade, the 1 gram material, and it's on CIL. Okay, this PEA was done in 2023. Okay, it has, let's say, I think it reflected $1,100 all-in sustaining capital. Really good. If you look at today's 3,800, there's a lot of margin. Okay, this is a base case. We did the NPV. It was at $2,200. Okay, had an IR of 5%, $329 million, and IR of 28%. This mine will produce almost 81,000 ounces a year for the first 8 years. Okay, and life of mine about 854,000. We're doing a feasibility study right now, and we'll probably increase this 5 to 10%. The average mill head grade is around 0.88, and the recoveries are plus 95%. Okay, you can see on the bottom left, this is the amount of production per year. I say it averages around 80,000 ounces, and the schedule and the grade that we mine. Here's where a key point is, okay? We did some sensitivities to gold pricing, okay? So, if you look, so the long-term consensus right now, I think is around $2,800, okay? So, if you use $2,800, our NPV market cap would be $602 million, US, okay? So, and right now, I think we're trading at $50 million. So we're trading at 0.1 of NPV, okay? As I previously alluded, I think you can sell these types of deposits between 0.25 and 0.35. So that's using 2,800. The numbers get ridiculous if you get, like at 3,800, I believe the NPV is almost $1 billion, okay? Which means that today we're trading at 0.05 of NAV, okay? So in terms of an investment thesis, if you're looking at deep discount value, I would look here. This is just more of how we estimated our mineral resource. All this is on our website. This is all done by independent engineers, okay? But what's important is that we have 30 million tons of 1 gram material would contain about almost 1 million ounces of M&I, which will get converted to PMP feasibility study. We also have, that was using a 0.35 cutoff. We also have in the inferred category at the same cutoff about 250,000 ounces at 1.04 grams per ton. So very attractive in terms of grade, very attractive in terms of recovery. Okay, this is an example, a screenshot of our pit. This is done at a 1750 pit. It shows where the measured and indicated is in our pit. You can see that there is space deeper. There's more ore there. There's, and in the next slide, this is where the inferred is. We've done some more drilling. We think we can convert some of the inferred on our property into M&I, into PMP. Okay, so upside in the property. And finally, this is on the Lemmy metallurgy. Okay, very soft rock, low resistance to breakage. Okay, we can recover close to 50%, over 50% using gravity. 95% can be recovered using traditional carbon and leach methods.
Would be great if you could wrap up. 1 or 2 minutes.
And test work shows that we can, most of the cyanide tails can be treated and make very well a good treatment for the environment. And the consumption costs for our reagents are sub $5 per ton mill. So in terms of metallurgy, this is a real big winner, and one that should look at all deposits. Okay, geology, it's a relatively compact project geometry. It's a 1 kilometer by 1 kilometer square, very structural, okay, 100% oxide, no sulfides, okay, very amenable to the metallurgy. And we're well understood, we understand how the body, the mineralization are in place. So taking a look at our share structure, just looking at valuations, as I said, right now we have 307 million shares. What's to note that we started, we have options, we have in the money warrants at 18 cents and at 22 cents, but I think today we're trading at 27 cents. So that brings, those two collectively bring about $16 million more dollars. We have $13.1 million in the till right now. That's enough money to complete our permitting and go to a construction decision. Okay? You can see that we started, if you just want to look, when we started our journey, we started here. Financing, money. Haven't done for many, many years, since August of this year. So the market is responding. I think yesterday we closed at 27. Another key point on this slide is that there's a lot of commitment by management. We own almost 21% of the company. So we're covered by Benton. And our last slide is more of a summary. So we think that we have the right combination of geology, management. We're completing our feasibility stage project report by March, April this year, and we'll be in a position to either sell, merge, or build. So I think you have still a lot of deep discount value in this stock. Thank you.
Thank you so much. I think we'll continue at 10 with Denarius battles. So